Hey guys, so per usual, everything on this channel is intended as educational information and not as financial advice. So if you haven't seen this already, I posted it on Twitter, but it's generally my guide to how I open and close trades. I've talked a lot about cloud in my videos. I plan on talking a lot more about cloud in a few separate videos, so look for those when they come out. So we just had a weekly close. There's been some questions as the strength of the trend, the health of the trend, trying to diagnose what the heck's going on here. So let's take a look at a few different parameters, a few different ways of skinning the cat, as it were. I don't use Heikin-Ashi a lot. I made a video on how to use them, what they are, etc. So if you haven't seen that and you don't know what this is, check it out. Basically, I'm assessing how these candle bodies look on the weekly close. Essentially, if you have, in a bull trend, opens and closes of the candle body itself above the previous candle body, that says that trend is strong. If the candle bodies are large, just like any other system on candles, it says trend is strong. You get into trouble when you get things like this and you get dojis or red candles, which are, in a bull trend, obviously opposite of what you want to see. So we have not had that yet thus far. So based on Heikin-Ashi, I can say things look okay. The open and the close of this candle was above the previous. So all systems are go still, according to Heikin-Ashi. Now, when you go over to the candlesticks naked, to me it looks very concerning because I'm seeing things like tweezer top. I'm seeing some sort of trident on the wicks, which I never like to see. So the Heikin-Ashi sort of calms me down a little, brings me off the ledge, you know what I mean? Like, and just relax, everything's going to be okay. That's another reason to use Heikin-Ashi once in a while, so long as you know what the hell you're looking at. Just so if you're not sure, if you're on the fence, you can be convinced one way or the other. Now, if this showed weakness, and this shows weakness, you know, that is even more evidence, more concern to say I need to think about a real pullback going. Is a real pullback going to happen here or not? I don't think it is. Again, I'll say this on every video. Any weekly chart I ever show you, 466, it's going to happen. I don't know when, anytime next year, and I will back the reasoning up on that in this video specifically, but basically flat Kumo equals magnet. I've said that 1,000 times on Twitter, 100 times in these videos. It's the same reason when we were down here that I said we were going to hit 620. Again, sounded crazy at the time. There are plenty of charts out there on Twitter if you want to take a look where I was talking about that, but the point is this will happen, especially if we continue to just range in this area. There will be a stab at 466, 465 sometime next year. I'm just saying it's going to happen. Right now, again, weekly cloud, everything's completely bull. We're above cloud on price. Cloud itself is bull. TK has been bull for a while, so you want to be biased in the bull direction. If we look at the uptrending pitchfork, everything's still holding as planned. No threat to trend whatsoever. 2 wicks into this diag seems very bullish to me as far as continuation is concerned. Again, we're looking for somewhere on this median line, so 800 plus at this point, probably before the end of this year, as far as the target's concerned. Because the median line is always where price is trying to get back to, sort of like the equilibrium point when you're using pitchfork specifically. We did get the double top on the RSI, which I talked about a couple weeks ago, I think. This isn't scrolled back far enough to see it, but there was also a double top on the last high. Anytime you see a double top, that's cause for concern, obviously. We didn't get a massive overbought situation with the double top on the RSI, which is even more cause for concern for pullback. But nevertheless, the double top was there. There was a bit of a bear dim on this as well. I talked about that already. Here's another idea I've been floating around for a little while, cup and handle. Again, if you don't know what cup and handle is or what they are, how to use them, I did a video on that. Check that out. The cup is solidly formed. The handle, again, looks great. We had 2-3 wicks on a 618 fib, which to me says everything's really strong. Depending how you draw the fibs, it might look a little differently. All I did was go down to this candle body and this top here. So, you know, it doesn't, to me, people go a little over the top with fibs as far as things need to be looking a certain way. And, you know, I get it, but for me, this is good enough. So again, I'm expecting a handle here. Either a U, another U, or just a V is fine. Once we break the horizontal on the cup, the target becomes 917 plus, 920, 960, somewhere in there. So this coupled with the fib extension, coupled with the measured target, coupled with the pivot and the pitchfork and a few other things that aren't on here are the reasons why this is sort of a confluence of resistance to look out for. So you could just stay out of a trade completely until we break the previous local high here. And I think that's a very good time to enter based on this chart pattern. Now we might get a throwback, so sort of a breakout above the horizontal and then a test of the horizontal, and then it might go up. So that's something else to watch out for. It's also interesting, as the handle's forming, we're getting a consolidation of volume. Usually that speaks to a consolidation in price as well, and I think that's the case here, especially if you look at the weekly again, which we looked at. So this is Daily Cloud, Mac Daddy King of what I use for trading. Let's break down a few things. Why I always talk about certain areas on the cloud, why I talk about flat Kumo, why I talk about edge to edge. This is really nice because it is showing sort of a repeat of previous examples right on the daily. So let me just run through this from left to right. People were asking about lagging span. I'm going to do a separate video on that, but just for this specifically, so lagging span is just 30 periods behind price. So you can see here, if you measure 30 periods, you get your lagging span here. In a vacuum, the lagging span is basically meaningless as far as on its own. All it is price behind price. That's it. However, you can use lagging span a few ways. So when you're looking at an entry, I'm just going to highlight this real quick. So you get a Kumo breakout, which is another type of trend indication. If you check the checklist that I showed you at the beginning of the video. So you get a Kumo breakout, you can ask yourself, is the lagging span above the cloud and above the price? If it's above the price, that's usually good enough for trend confirmation. If it's above the cloud and above the price, that's a stronger signal, obviously, that your long is good to go. Now you'll notice that when we were here, lagging span was not above cloud and above price. It was just above price. And then that's just one example, but that's one way that you can use the lagging span as confirmation. So once we get here, I haven't measured this, but I'm pretty sure it's above cloud and above price 30 periods back. So as far as the cloud checklist is concerned, all cylinders are firing go, telling you this is a real breakout. This is a good time for an entry. Because again, you get the Kumo breakout, you already had the TK cross, your lagging span's telling you you're above the trend, you're above the price 30 periods behind the current price. It gets iffy in here, but you can see price quickly busts through the lagging span resistance on price here. So what am I looking for lagging span on current price? So if we go back to this example, you can see how lagging span, when it's in price, that's one of the first indicators that there's a weakness in trend. It's also an indicator of consolidation. So I measured this one. So 30 periods back from this candle, price entered, lagging span entered price. Okay, so that's your first clue that there's a weakness overall amongst the many other things. Okay, now I was expecting this to break up here. I was not paying attention to this, even though I should have been. So if we're over here and lagging span gets into price, that's a signal that if you're long on high leverage, you may want to, you know, think about either A, not opening another one, or B, closing your trade and waiting. So that's lagging span. And again, you want in a bull trend above cloud, above price. You don't want lagging span to be in 30 periods behind in the price when you're in a trade. That shows weakness or sideways consolidation. Okay. Another thing I talk about a lot is a key June bounce. So if we look at this example, I'm always telling people what I do, which is put my bids on the key June, no matter what, on the daily key June, no matter how crazy of a pullback it'll be or how it'll look. It happens all the time. Okay, so here's one example. This is loosely another example. I actually did a video talking about this example back in June. So here's the current example. Again, this already happened obviously, but anytime, especially when it's flat, any flat line on the cloud is always a target for price to pull back to. So again, flat key June bids are, that's a great place for bids or asks. And you can see it happen here as well. It's resistance, here it's support. Okay, support here, and it'll stay sideways until we move out of this range. And again, that's a way of assessing strength of the entire trend versus consolidation. If we just stay sideways, the probability of touching the key June gets higher and higher and higher until we eventually do touch the key June. And then we decide whether or not, you know, price is going higher or lower, or in this case, just sideways. So that doesn't really tell you much on its own, but again, you want your bids and asks on the key June. So another area of importance is the Kumo twist. So it's important for two reasons. One, it usually, if there's going to be a trend change, it happens through the Kumo twist. I don't know why that is. It just does. Okay, I don't care. The point is, when I see one, I get the, you know, my spidey senses are tingling as far as what may or may not happen. Now, I talked about this before. This one happened as well on Twitter. I said, look, there's a Kumo twist here. That's a great time for price to move through that zone. So basically, when cloud is thin, that means that support and resistance is weak. So there's a 50-50 chance that anything will happen at that exact area. So we had a Kumo twist here, price went through. We have a Kumo twist here. I was saying we got to be careful. Again, this doesn't look like it's going to bust through the Kumo twist, but who knows what will happen tomorrow. I'm not concerned about it, but if we were closer like we were here, it's definitely an option. The other way to use the Kumo twist on lower time frames especially, but it could have been used in this case here in this trend. The Kumo twist is another indicator that, part of the checklist again, that your long entry signals are firing correctly, because that says the old bearish cloud is turning bullish now. The old resistance is turning into support now. So again, I haven't measured this, but somewhere in here, you'd be 30 periods ahead, and the cloud would twist. So another thing I talk about all the time is the edge-to-edge trade. Again, I was tweeting about this and talking about this when it happened, but when you get a candle close in the cloud, the thicker the cloud, the more you should watch for pullback or continuation, however you want to say that, to the other edge of the cloud. So think of it as an edge-to-edge trade. If you get a close in the cloud, expect a touch of the edge of the cloud, okay? Now again, I know this is early, I know this looks crazy, I know whatever you want to think about it. I keep my opinions aside, I'm just looking at the cloud. If we get a close in the cloud, so below 680, when we hit this zone, I can reasonably expect to a high probability that we will test 600-ish, okay, based on the size of this cloud and just the edge-to-edge principles, okay? So those are two examples. You see them all the time, and I try to talk about them when I see them as well. And lastly, I just want to talk about the flat Kumo equals magnet. I talk about this a lot as well. When it usually goes hand in hand with the edge-to-edge trades, because anytime you see a big fat cloud and a flat line on the Kumo that usually represents an opportunity for price to move really far. You can see we have 2 of these occurrences here. And again, this might look crazy, you might not believe me, whatever, I don't care. The point is the cloud, it draws itself. I don't do anything. I stay out of it. And it's telling me 580 and 605 or something like that. If we pull back, those are the zones where I can expect support. So I hope that cloud explanation helps hammer home some of the points on the checklist. And again, I'll be doing a separate video on all those pieces just to continually talk about it. Things like the lagging span, which I generally ignore, but does have valid signals every once in a while. So now if we go to the daily candles, pivots, yearly, you can see we pulled back from the yearly. We're going to get a new yearly pivots in January, obviously, so I'll be looking out for those. Something else to look out for. If we have a nice candle close above the yearly pivot, that gives some evidence to testing the next resistance higher, which is around 900. I don't know the exact number, but again, that matches the cup and handle around 917 as far as that fib extension, and that target 920 to 960. So it sounds how it sounds. I don't know. To me, it sounds kind of crazy, but again, I'm just trying to be as objective as possible using various things that auto draw themselves. Okay. If you look at the monthly pivots using the daily candles, you can see we're just sort of ranging in between here until we break out of one of those. We may just continue ranging indefinitely. If we look at daily 5200 EMA again, as far as a trend check is concerned, there's absolutely zero threat to the trend. This would be super lagging if there was a threat to the trend, but it's another example you can use if you don't like any of the cloud stuff or whatever else I'm talking about. We didn't even touch the 50. So again, this says that A, the trend is strong, and to me it says that B, if we do pull back, there's plenty of room to go down and still not threaten anything as far as the trend is concerned. If we look at the micro 4-hour trend, 5200, again, this is basically cloud is telling me the same thing, but your long entry was the failure to cross the 5200. So if when you get a 5200 cross, that says generally if you want a short or a long. In this case, price was above both when it was close. I don't know a better way to say that, but that's usually an indication that something's going to happen. And then price just stood above the 50 basically indefinitely. Something else I want to point out on this drop, not only did we hit the 200 essentially, but we also bottomed on the RSI on the 4-hour, which is generally a good signal for a reset that's done. So quote unquote bottom is in, if you want to think of it like that. So to continually create cloud buy-in, I'm just going to re-show this example that I posted on Twitter. So this is an edge-to-edge flat Kumo situation. I was calling that even before the rise here. This was definitely based on the election. But the point is, it was there the whole time. Okay, so edge-to-edge flat Kumo, I'm saying, look, we're going to bounce from this area, right? And what happened? We bounced from that area. Sure, it's not always that perfect, but this is one of the better examples that you can see play out in real time. If you hate cloud and everything else I'm talking about, here are super easy, if you've done this a lot, horizontal zones, okay? So this was November 12th, before the drop. What are you looking for in horizontals? Again, I've done a video on that. If you don't know what I'm talking about, you can check out that video further, but you're looking for points of resistance and or support to draw horizontal lines on from, and then you can use the market memory principle and say, this happened before, it might happen again. So if we're looking at this area specifically, this was a very good support type zone based on resistance turn support. Okay, here. So sure enough, what did we get? We got a wick right into that zone perfectly. Again, it's not always this perfect, but this is a great example to highlight. Something else in here, there's a hidden bull div. So we're getting a higher low in price, but a lower low in RSI. This says that there's underlying strength and weakness in the bears aren't able to take over like they were in this zone. So I know this was a long vid. Thanks for sticking in there. As usual, like, dislike, share, subscribe. Hit me up on Twitter, Telegram. Don't be shy. I'm in front of a screen most of the day. This is my donation address should you feel so inclined. And as usual, happy trading.